Good evening and welcome to tonight's live webinar, member-only content, where we look at ASX investment opportunities in review for the 18th of January. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service which incorporates our model portfolios across the ASX 2050 100. Also, we can add in US exposure through the S&P 100, includes our ASX and US high convictions. We also operate an independent portfolio where we can work in partnership with you to execute specific ideas, and we utilise derivatives to enhance portfolio returns. So if you'd like to discuss the broking account service, please call me on 1300 614 002. The technology that we're using tonight is a member-only service. It's the member area of the Investor Signals site. We have some trial clients with us this evening. Access to these webinars are all part of your 30-day trial, and then obviously you can extend from the trial period into a paying membership for $1,320 for the year. If you'd like some more tuition on how to use the technology, don't hesitate to call me. Happy to discuss both the market strategy and how to get the most out of utilising and navigating the technology. The graph up on screen is the Nasdaq. The US markets closed this evening. We saw the start of US earnings on Friday night with the big banks reporting. I'll get to that in a minute. We'll have a look at a graph of Citigroup if we have time this evening as a bit of a benchmark for the US banking. But in general, bank stocks were down between 3 to 7% in the US last night, even though the results beat analysts' expectation. We know that we're in a backdrop where some technology stocks are very extended from a PE basis, and we remain cautious when thinking about portfolio construction as a result of that backdrop. But we also continue to monitor closely any first signs of evidence that there is fading of that momentum trade, which effectively was buying stocks at any price for growth. So PE doesn't matter, just simply buy the stock because it's growing, and we've seen that in areas like Afterpay and Tesla, and what we're looking for is there a point where that level of optimism in the market shifts. So with that, let's go into the graph of the Nasdaq. Let's take a closer look at that, and then we'll move through the ASX top 100 stocks this evening. So the Nasdaq's very extended, and if we sort of bring it in and have a look at it under a microscope here, 2 days of selling is not enough to say it's the beginning of a downtrend, but what we want to watch for is really below this level here of approximately 13,100 in the Nasdaq becomes resistance. We'd need to see tomorrow night, as we have more US banks reporting. We'll probably expect to see further selling in the US banking sector. What we'd be looking for is the industrial companies, such as Caterpillar or 3M, and the technology companies, the big leading, Facebook, Amazon, Google, all to beat analysts' expectations and to provide an optimistic outlook in order for this uptrend to really continue. For the moment, what we do know is that the market's reaction to the banking results has not been very encouraging, and that could be the beginning of further selling, and that's why we just need to monitor that. So as a reference, that the Nasdaq hasn't closed below the moving average, but I have just shuffled that support up there to 13,100. Get more optimistic on the market if it trades back above that, but whilst it sits below, remain a little bit cautious. I'll toggle through a couple of others just in this watch list. So the S&P index, so you can see there what I've done is put my support line under that little consolidation phase over the last week. The S&P has closed below the average, but again, from a bullish standpoint, we'd want to see it get back above sort of that 3,780 roughly level. Otherwise, at the moment, we remain a little bit cautious at these banking results and the market's reaction to them. The XJO, so you can see there I've put resistance up at 6,752. It's also below the average. A little bit of selling in the market today. We've seen weakness, and we'll have a look at those stocks in a moment. But again, not enough to say that this is the beginning of a downtrend, but a couple of things there for us just to keep an eye on. So with that, let's go in and look at the ASX 100. What I wanted to do tonight is just reverse the order. So we'd obviously normally start with stocks that are performing well, so we'd get the best performers to the top. Then we'd start with buy signals, and we'd normally go through in that order. Tonight I just want to show you just a way of reversing this process where we actually get the worst performers to the top. We get the ones that are under sell signals to the top. So now what we're going to be doing is going through the worst performing stock today that's under sell signals. Then we're going to get a certain way through the list, and we're going to shift from companies that are under sell into companies that are under buy, and then we'll go through those buy signals at the end there. So Illumina is the first one. So if we look at this, it's been under algorithm sell signals there from around $2, continuing to make lower lows, lower highs. We were bullish on it, if you recall, at around $1.50 with a price target at around $2. So for us at the moment, most of that trade's been captured and done. As was the case, we were bullish on a breakout trade with South 32, and for the moment we sort of see that trade as mainly done as well. Mineral Resources created a new high. I'd expect over the course of the next 3-6 months we'll see a sell-off here, which will bring this back into algorithm buy condition territory. But we're certainly not there at the moment. Nine Entertainment under sell signal, so we're not doing it there. BHP under sell signal, but we've generally stayed long BHP, Rio, Fortescue, even the resource ETF as keeping broad exposure. We've seen iron ore prices pull back fractionally, but they're generally at very high levels relative. They've broken out from that 120 that they were at 6 months ago to be trading up between 150 to 170 or even almost 180. BHP's created a new high, so over the course of any sell-off in the coming months, we'd expect to see that switch back to algorithm buy conditions. But not sure you need to act too aggressively on cutting the iron ore exposure from portfolios just yet. Downer EDI, our preference is CIMIC, but it's under sell signals. So again, we're going to be moving through these. They're all under algorithm sell, which is a reference to the red box up the top being the most current signal, opposed to the green at the bottom. So Oil Search, the energy complex we continue to like, and I've spoken in detail about the outlook on that for 21. BlueScope Steel under sell, but will likely switch to buy conditions later this year or early this year. National Australia Bank, so if we just pause and have a bit of a look at what's happened here. Citigroup was down, I think around 5%. Wells Fargo might have been down around 7% on Friday night. So the reaction to the US banks was negative. And the main reason for that was there was a fall off on the revenue line and the profit line. And the profit was padded by them adding back reserves that had been put aside in prior quarters, was added back to the profit line, which padded the underlying number and made it look better. But really, there wasn't a lot of bright spots within the US banking results. So it'll be interesting to monitor sort of the next round of results that come through tomorrow night. But that's just flowing through to, denting, I guess, the sentiment towards the Australian banks as well. Again, it's too early to say that it's the beginning of a downtrend, but given the US's reaction to their bank results, ours are mostly closed on the lows today. We just need to be a little bit cautious there in the way you think about your banking exposure at the moment. Bendigo, we're on the short side of at the moment. Boral up against resistance at around $5. Oz Minerals, wait for this to pull back. We'll get a buy signal over the next 3 to 6 months. We'll look at that. Bank of Queensland, we're on the short side of that. ANZ up against resistance there at around $25. Rio, so again, softness in the iron ore, but from very high levels, strong earnings results, good dividends. At this point, not rushing for the exit there. Soul Pattinson, not doing there at the moment. ALS up against resistance, but not doing too much there. AGL continues to make lower lows. If we look at the history here, sell signal there at 18, another sell signal there at around 14, and it is below the average, so the counter trend trade's not in place there. Origin, is in a downtrend, making lower lows, lower highs. But when we look at this, to me, it's consolidating. I like the fundamental earnings growth for their natural gas business. Obviously, um, retail electricity is a little bit tough environment at the moment. Um, but for that reason, whereas sort of normally we wouldn't have a support line there under a stock that's mostly in a downtrend. But I think with Origin, just need to keep a closer eye on this. Maybe just it consolidates within this sort of 450 to say 550 range, but it could be basing and getting ready to make a longer term uptrend. So that's one that sort of think about as a counter trend trade. Tabcorp up against resistance there at around $4, not doing it there, not doing it in Atlas, not doing it in AMP, all under sell signals. Suncorp, I wouldn't say this is top of the list for my short stocks at the moment, but I do feel that maybe back up at around $11 it's starting to get a little bit expensive. Vicinity not doing there. So again, all these are under sell signals. Recent signals there up the top there show you the shorting signals. The red and green arrows, if you're joining us for the first time, an interim or a shorter term trend. So in the case of Challenger, up against resistance, and the shorter term trend there is just suggesting that the rally's starting to tire there a little. Star Entertainment, so Star and Crown really struggle with visibility of earnings in this economic environment. Surprised to see good earnings results come through for these companies. So we're at this stage sitting on the short side of Star through the upcoming earnings result. CBA, we're on the short side of this as well as we are with Citigroup. And we'll continue to sort of monitor those banking results. Santos, breakout trade, buy it on the next dip. I think oil still does well in 21, but maybe it's ready for a little bit of a pullback. Reese not doing there at the moment. We'll have a look at that on the next algorithm buy signal. Center Group sort of tracking sideways, not too much there. Brambles, I continue to kind of like the fundamental story here where they should deliver 3 to 5% earnings growth. So it is under sell signal there from $11, which rather than selling the stock, we've mostly just been fairly aggressive and sold covered calls over it. But I would expect that we're getting down to a level where it should find support around 10.50. Telstra, again, one of these rare, normally we would have that as a resistance level there. You can see the sell signal there. The stock fell away from $3 down to $3.20, or down to from $3.20 down to $3. But I'm just shuffling this around the other way and saying, well, let's watch this to see if this $3 support level holds. The reason for that, the company's reaffirmed that they're paying their full 14 cents a dividend. Don't see any need to cut it, and we do have the approaching spin-off of Infrastructure Co. So, looking to see whether Telstra is building a low there where it can rally, especially if you share the thoughts that that global interest rates are not going higher in any hurry. So if US yields start to run into resistance, which I think we've just starting to see the first few days of that, yield sensitive names like Telstra will start to do a little bit better if US interest rates stop moving higher. Insurance Australia Group, again, terrific company. It's been under pressure. We've seen weak profit results. The algorithm sell signals picked up those selling points there, but we could be getting down to a level where a support level starts to develop, it tracks sideways, and we could start to see a turnaround. So it'd be nice to see what the upcoming earnings results are like there for Insurance Australia, which for all the Australian companies in February will start to get a bit better, a bit more clarity around what the last 6 months results look like. Interestingly, Woolworths is under sell signal, so resistance there at $40. Downside risks seem fairly low to me, so owning it and selling covered calls, creating income. Macquarie under resistance at 140. I don't think there's enough evidence to say that the earnings result's going to disappoint the market. I don't know that the market's expectations are actually that high for Macquarie, so the bar should be set fairly low, but equally I'm not sure they've got really the drivers there to deliver a profit result that materially surprises to the upside. So I'm thinking Macquarie tracks mostly sideways under that 140 level. Crown we're cautious on. Woodside Petroleum continue to like the energy spectrum, and I've spoken in detail about that. Incitec was a counter trend trade from $2 up to around that 240, 250. I think that's done for the time being. Coca-Cola's under takeover offer, I think around 13 odd dollars there. Dexa's not doing, excuse me, not doing there at the moment in Dexa's. James Hardy, we assume resistance up there at around $40. Horizon, coal's a dirty word. We've seen this underperform. They came into the pandemic with no earnings growth, and it was really a yield story. The market's re-rating that on the basis that they're not going to maintain revenue at the levels that we've seen, and you're seeing the stock sort of marked down from where it was trading at around that 450 level down to around 380. But there still is yield support there for Horizon, but obviously not much in the way of growth. Spark Infrastructure under sell signal, not doing it there at the moment. Worley's under sell. Medibank, bit cautious there just because of the weak earnings trends coming into the last 6 months results. Reliance Worldwide under sell conditions. Treasury under sell conditions. Orica under sell conditions. Magellan could be getting a little bit oversold down here at around $46. You could keep an eye on this and wait to see whether it trades back above that 10-day average. Xero, we're looking for further correction to the downside here and an algorithm buy signal, and I'll update you on the blog when we see that occur. Seek looks a bit expensive, and we'd want to see a more material correction lower there in an algorithm buy signal. Ampol under sell signals, the value range here has been 25 support, sort of 30 resistance. We're now getting back up to testing that $30 level. QBE Insurance, so this was mainly an issue that resulted from liabilities coming out of the UK, where QBE is going to be responsible for fulfilling insurance obligations to business disruptions and other claims relating to COVID, whereas in America we saw the courts overturn that and mitigate that liability for the insurers, but in the UK it seems to be playing out a bit different, so that's partly why we're seeing that sell-off there, so we'll continue to monitor that in the news. So Stocklands is under algorithm buy conditions, so the difference here is the most current signal is the green box at the bottom there, which means the stock then gets added into our model portfolio. Now, part of these recordings, again, if you're joining us for the first time, is where I share with you the stocks that sort of tend to be more favourable than others within the overall model portfolio. So Stockland's under buy signal, support there at $4, but not really one that sits on my high conviction list. Beach Energy, continue to like that as a recovery play, but whether it's through Woodside or the Triple O Oil ETF. Charter Hall, so we're starting to see some of these property names now switch back to buy signals. Don't want to be overweight these office REITs at the moment. Not sure there's enough visibility on earnings, but it's just worth sort of realising that we're starting to see the early stage of buy signals, not just in the individual property stocks, but also in the property ETFs, you may have noticed. But Aristocrat support there at around $27. Newcrest continue to like gold. Obviously, it's been a bit frustrating, the consolidation that's occurred. We saw gold break above 1900 an ounce, and then we saw US interest rates push a little bit higher, and then that sent gold back down to around 1830. But it's still, for me, more in a basing or a consolidation. Still think the gold stocks have a rally higher when equity markets move to a risk-off environment. Evolution, preference Saracen and Northern Star and Newcrest over Evolution. Fortescue Metals holds up well given strong iron ore prices. Qantas, hard to get visibility there on earnings. A2 Milk, keep an eye on this. If the upcoming earnings result disappoints, it's probably the time to start thinking about buying call options or buying new stock position in A2 Milk. I suspect we're getting pretty close to ultimately where a valuation argument starts to bring buyers back into the market. Lendlease, this is going to be a pretty messy result for Lendlease coming up in February. but looking for a much stronger second half of the year. It'll be interesting to see whether the market's patient enough to look through a fairly soft result. But we've seen a gradual recovery from $10 up to 15, retracement back to 12. It's now under algorithm buy signals. Amcor I like. I think this packaging business still offers a fairly safe harbour if we were to see volatility pick up again. So deep discount for Amcor would be back between 13.50 to sort of say 14.25. We may not get down to that level. Just keep an eye on it. It's below the moving average at the moment. The stochastic's still trending a little bit lower. So the first sign you're looking for is that stochastic starting to turn higher, and if you really want to be patient, wait for the price to move back above that average there. But the fundamentals still should be supportive for Amcor. Afterpay trading at 30 or 40 times revenue. Yes, there's terrific growth in the business, increasing competition. Get a little bit cautious here on this one, and we're happy to take a look at it on another algorithm buy signal. Certainly the history of the algorithm did a good job of picking up good entry points into the stock, and it's obviously performed well, but a bit expensive at the moment. AusNet Services, not really one we're doing too much in. Again, if US interest rates stop rising, which we've just started to see them pull back in the last couple of sessions, infrastructure or yield sensitive names should start to do at the margin a little bit better, but other preferences over AusNet. The index, we'll come back and look at that at the end. Mirvac, again under algorithm buy signals, one of these property stocks, but not one of our preferred allocations at the moment. Aurora, it's worth just making a note that this now makes it onto the list. It's been under sell conditions for quite some time, sort of making the lower lows and lower highs throughout this period, but we're maybe just in the early stages of starting to see this debase. So I'll take a much closer look at the February earnings results. Previously the company's had falling earnings, which has been why we've avoided it, but we'll certainly be willing to take a closer look at these upcoming results and see what new evidence of maybe improving revenue or improving profit. GPT under algorithm buy signals, but still within that property space, so keep exposure low there. Cube bumping sideways at around that $3 level. Link administration, so the bidder of Link walked away. We haven't seen too much of an impact on Computershare, but both Link and Computershare are under algorithm buy signals at the moment. APA Group, so two issues facing APA. One's the higher yields in the US make infrastructure less attractive, so the higher interest rates and the other is I think the market's a bit cautious about the cost overruns with this project, but ultimately it should set up a good buying opportunity. So continue to watch APA, watch for the stochastic to turn positive, watch for the price to trade above the moving average, but maybe it's a bit out of favour at the moment. They won't pay another dividend until June, but from a valuation standpoint, I like sort of APA, so we continue to stay on the long side of that. Coles Group, a little bit of a sell-off from 19 back to 17. Do we get a sort of deeper correction back down to sort of low $17? Well, we'll wait and see, but certainly that would be, if you don't already own it, it would be a deep value kind of buying opportunity there. Keep an eye on the stochastic. It may be that we find support more off that 1750 level there, which owning Coles and selling covered calls is the primary strategy that you want to be thinking about there anyway. Altium, not doing too much there at the moment, but I'll keep you updated on the blog. Sydney Airports, we've been cautious on that, and we're seeing that correction just highlight that the price has just about filled that gap now. Transurban, a little bit weaker than I expected here with Transurban. Again, partly the higher rates in the US, and then obviously higher levels of COVID and social restrictions and lockdowns globally impact Transurban, especially with the core businesses in Australia and in the US. But monitor it. The company hasn't provided any warnings around further cuts to their dividend at the moment. So just maybe think about this, that if we were to see that move back above the moving average there, it could be an opportunity to add Transurban if you don't already hold it. Fisher Paykel Healthcare, I like this support down there at around $29. Should be a position in portfolios. Sonic Healthcare, we like this. Own it, sell covered calls. Next, DC, cautious on that, and we'll take a closer look at the upcoming earnings result. Wesfarmers, high quality business, and you want to make sure this sits in the portfolio. Is a bit expensive here at the moment. If we saw a deeper sell off, say back down around that sort of 45 to 48 level, would be a great buying opportunity. But not sure that we get that level of correction unless there's an overall sell-off in the US market. CSL has to be now on your radar. The correction from 325 down to 270 looks attractive, and start accumulating it. Cochlear, interesting the bounce that it's had off that 180 support level. It's above the moving average and it's under algorithm buy conditions, now sits in our model portfolio. Cleanaway, good business. We've seen private equity make a tilt for Bingo, which is another waste management company. But Cleanaway tracking sideways, support there at around 230. And again, we'll review the upcoming results. Saracen, one of our preferred exposures to gold at the moment, so be a buyer of that around that 480 level. Computer shares held up well, support there at around 1380. Goodman Group, terrific business, 9 to 10% earnings growth. Support there at around that $17 level. If I'm looking for property to add into portfolios, Goodman Group's my preference. ASX corrected now from $90 down to $71. The December trading volumes were a little bit weak, especially in the derivatives area, but the company offers an attractive 100% fully franked dividend yield, and it's obviously critical infrastructure. If volatility in the market picks up, ASX benefits from it. So I'm going to create a pretty wide band here, but somewhere between this $70 level and 63 you want to be accumulating ASX. I think it trades higher as we get into the middle of this year, so it's certainly a buy on the dip, and it may be that we're closer to that turning point than we realise. So around that $70 level could even be a pretty good entry point there, so watch for it to cross back above that moving average. Ansell I like by this, so the high Aussie dollars worked against some of these healthcare stocks, obviously converting US earnings back to a higher Aussie dollar erodes the Aussie dollar reported profit levels. So Ansell's been one of the companies that's been impacted by that, but at around $34-35 I think the stock offers good value, and it's in a rare sort of area of the market where the earnings growth should be quite bankable. Car sales, good business, buy this on the dip, start thinking about accumulating it here. Northern Star, again like Saracen, Northern Star, Saracen, Newcrest we continue to like. Appen Group, we saw the profit fall 30%, stocks down more than that, could be getting down to a level where we start to see some price support. Domino's, I like this. You can see there I've shuffled the support back up to $80. It's under algorithm buy conditions from 72, but maybe buying it at $80 provides another buy on the dip opportunity. IDP, I need to cover this a little bit closer, and I'll update you on the blog. We'll take a closer look at the upcoming earnings results. REA Group looks a little bit expensive. Terrific business though. Any sort of more significant sell-off and another algorithm buy signal, we'd be looking to add that into portfolios again. So the last signal there at around say 100, rallied to 150. If we were to see something back around that 130 level, could provide a good entry level there. WiseTech now under algorithm buy signals there at around 27. I'll continue to update you on the blog regarding that. ResMed buy signals delivered good revenue and profit growth at their last result. We see them report towards the end of next week from memory, so I'll update you on the blog as those results come through. JB Hi-Fi, so consumer spending continues to remain very strong and a bit of a bright spot. So we've seen JB Hi-Fi and Harvey Norman do very well today. Ramsay Healthcare buy on the dip there, supported around $60 approximately, should trade higher. And TPG starting to move off that $7 support level, pushing up towards $7.20. So they report their results in February, and we'll be looking for good commentary out of the company there around the cost synergies post the Vodafone acquisition. Now, just to finish off tonight, let's have a quick look at Citigroup's results and the market's reaction. So the stock closed on its session lows, as I mentioned, many of the banks did. A lot of the US banks were down anywhere from 3 to 7%. So that could be a leading indicator to the concerns that may even stretch to impact the Australian bank. So 2 days of selling in the market's not enough to say the downtrend's beginning, but a couple of warning signs there with the market's response to these US banking results that you need to keep in mind. One of the ETFs that we like at the moment is the CNU, which is the China Technology ETF, and we continue to like, just to keep you up to date on a couple of these, the IZZ, which is the broader China index. That's rallied from 60 up to 64 following the algorithm buy signal. The IXJ, which is the healthcare ETF, it's going to be a slow mover, but still continue to think that provides some safe harbour if volatility picks up. What else have we been active in? So the S&P Global Dividend Funds, especially if we started to see, say, the S&P and the Nasdaq break back through those little resistance levels, you want to be thinking about global exposure still, which can be done through this, or even the Morningstar Moat ETF, which just gives you a bit more exposure to US technology. So you just need to monitor that S&P index as a reference point there. And wait, that was a health ETF. Is it IXI? Oh, sorry, the consumer staples. We've already looked at the healthcare. So I just wanted to point this one out. This is the iShares Global Consumer Staples. So again, as US interest rates have gone up, it's made this less attractive. But I think we're getting back down to a level where interest rates seem to be pausing, and we should start to see some buying interest come into this global consumer staples, which another way of playing that would be being long Woolworths or Coles. But if you're looking for a more broad global strategy, that's an ETF to think about. So just to finish this evening, let's go back to the XJO and just recap where we're at. A little bit concerned the US banking stocks response on Friday night. We get a further clarification tomorrow night as we see some of the other banks deliver their results. For the moment, just a little bit cautious that the XJO is below the average resistance at 6,752. A break back above that and a reversal likewise through the Nasdaq and the S&P means that the uptrend's continuing to stay in place, and we want to be focused on buying the dip in some of those stocks. But for the moment, just a little bit of caution there, and therefore running some hedging and sitting on the short side of some of those bank positions that I mentioned. Thank you for listening in. If you'd like to talk more about the strategy